I've got to say that I'm actually pretty surprised that the summer doldrums have not really had much of an effect yet on silver and gold. But nonetheless, that is the case as they're holding on firm as we get into these hot summer days. Let's talk about what's happening in the precious metals market right now as we explore. Indeed, gold and silver are reacting. In fact, we saw on our market watch last night, they took a pretty big plunge only to recover late in the broadcast. We saw them move back up, and today they're back in positive territory. Now, it's not a massive move to the upside. However, we are seeing them come back out here for a number of different reasons. So I'm going to be reporting to you the numbers right before the markets close here. Gold is up over 1% right now. That's up $33.51, bringing gold back now above $3,300 an ounce. It is $3,308.30 right now. Silver has only done about a third of that recovery here and move up to the positive. It's up 12 cents today, but it is back over $36 even in the bid price. So we're maintaining that critical $36 mark, but we've seen it trade right around this area for long enough now that we very well could start to see a new support developing, a new floor for silver. It's at $36.16, up 12 cents, just over a third of a percentage point. Platinum is also up slightly today, up $4 at $1,354. And that's a metal that we've been watching more closely now because it's starting to really break out. Indeed, it got over $1,400 a couple of days ago, so this is good news. Palladium is the only metal that took a hit. In fact, it plunged today, down over 2%. And remember, when I talk about these markets, daily move for the markets, anything over 2%, one direction or another is either a plunge or a surge. That's a lot for one day. So palladium took a pretty big hit today. It's now well below platinum for sure, $1,122 an ounce, down $30. So what's going on here is the markets are nervous. And even though the geopolitics are not really making the headlines, and they're still, obviously tense, there's no question about it, but it's not making headlines. And this is actually very good news for gold and silver, because usually whenever there's not much going on, they tend to react and fall a bit. But gold has edged higher, supported by a weaker U.S. dollars. The U.S. dollar is weaker, but it's down 0.4 to 96.81. So the dollar is getting hit here, and that is something that certainly is concerning for probably likely the Fed. They want a strong dollar, even though the strong, stable dollar is really the key, but it is still suffering from inflation. And that is something that is going to be with us here for a while. And so we're seeing a weaker dollar while investors hunker down for U.S. economic data, which is due out later this week. That's for signals for the Federal Reserve's policy path. And so the U.S. gold futures have settled higher, and again, over $3,300 an ounce. A weaker dollar today is providing a bit of support, but they're still within the well-defined range that has dominated since the middle of May, according to Peter Grant, who's a vice president and senior metal strategist at Zaner Metals. Indeed, and so that's what's happening there. And by the way, I want to thank Summit Metals for sponsoring this channel. You can check them out at summitmetals.com. So on the trade front, the United States and China resolved issues over rare earth minerals and magnet shipments last week, renewing hopes for further talks between the two superpowers. And Canada has scrapped its digital services tax, targeting U.S. tech firms late Sunday to revive stalled trade negotiations with the U.S. They tried to sneak that in there, but now they've scrapped it, so that is good. And but nonetheless, gold and silver are still up. And the dollar has languished, even though that is occurring against the euro and Swiss franc. as markets weighed the prospect of a ballooning U.S. government deficit and the potential for trade deals with major trading partners. Gold, traditionally considered a hedge during times of uncertainty, also thrives in a low interest rate environment. Investors now await the U.S. ADP employment data, which is due out Wednesday, and Thursday's initial jobless claims data for hints on the central bank's potential policy path. Citi analysts said in a note that they expect gold prices to consolidate between $3,100 and $3,500 in the third quarter of the year, noting that the late April peak of $3,500 may already be the high as the gold market deficit approaches its peak. And we also saw silver kind of easing back before going back up again. So that's what's there. Now, a lot of this, too, is all this talk about the, quote, big, beautiful bill. This is an important piece of legislation for a number of different reasons. Tax cuts typically does spur economic activity. And we likely could see that as this, and that will in turn increase revenues into the Treasury. But also, tariffs are also going to create revenues as well. Now, the one thing about that bill is it doesn't really give us a tax cut. It just extends the tax cuts that were already in place in 2017, unless you work in the service industry and your tips will no longer be taxed, apparently. At least there's some portions of it. And also, no taxes on Social Security, I believe, is also in the bill, too. But obviously, it doesn't cut spending, at least not for quite a while, and that's a big problem. But if we can get revenue in from tariffs and it doesn't have a negative impact on the economy, and these gold cards that are supposedly are selling, then that could offset some of that, and actually we could see deficit reduction and actual debt reduction, maybe sooner rather than later. I don't know. The one thing I will say, as somebody who is a fan of the president, but also like to be as real as possible, realistic about him as well as his policies, he tends to overpromise on some things and underdeliver. Now, that's just some things, just throwing a little bit of caveat there. He overpromises on some things and underdeliver. There's other things where he's promised and delivered exactly, and there's few things where he has delivered and it's gone above and beyond and over-delivered. But that's very rare for anyone, certainly given a politician or anything like that. But we have to be realistic about the situation we find ourselves in. The reason why I mention that is it's important to understand how general economics and the like can have an impact on what's going on with this country and with our debt. And with also the stability and influence of the dollar as a reserve currency. Because remember, in 1913, this essentially, from 1913 to today, this has essentially turned into this when measured against itself. And that's important because somebody else said, well, that's not right reporting. You should look at how it is compared to gold. Well, with gold, it's a no-brainer. It's obvious what's going on there with gold because gold preserves its wealth. But the Federal Reserve System in and of itself has devalued its own currency, so much so that it has lost probably about 96, 97, and maybe even 98, according to some estimates, of its value. But even if you take it to its extreme of 99%, well, you get what's going on there. And so imagine, if you will, if we get to a situation maybe sooner rather than later, if things work out, where we can actually reduce and eliminate deficit spending and also tackle the debt. If the debt stops growing and we see it pull back even just a little bit, that's going to exude a lot of confidence in the dollar. And I bet that that's probably what the Trump administration is betting on. I don't know if we're going to get there. That's a pretty tall order. But if we can reduce it enough to give some confidence, I think that is going to be quite a very, very big hurdle to cross over here. And that very well could have a negative impact on gold and silver prices, by the way. But also with what states are doing right now, and I'm going to be talking more about that. There's always of news coming out about what states are doing with regards to recognizing gold and silver. That very well could lead to something even bigger that could come down the pike. But we're going to have to cross that bridge when we get there. But nonetheless, through all of this, gold and silver indeed are precious because not only they are rare, in fact, silver the most common of the precious metals. They are metals that have been used as money for thousands of years. It's really up until the mid-1960s where they stopped being used as money, especially silver. Gold, maybe not as much, obviously, since 1933. I guess it stopped being used as money. But nonetheless, money they still are, even though they're dormant. They're essentially dormant for everyday transactions. But they are. There's a turnaround coming for sure, especially with initiatives out there like the gold back, which is, believe it or not, as popular as these are, it's still in its infancy as far as being transactional. A lot of people are not convinced of it yet, and the only reason why they're not convinced is because they've not seen it in action. I myself have not seen it in action, but I understand the concept and the fact that you can fractionalize gold to such a low level, and of course there's other areas of ways to fractionalize silver in existence. It's quite extraordinary. But gold and silver today are showing some strength in these summer months, and I think that's a very good thing and an encouraging thing. Let me know what your thoughts are in the comment section down below. Hope you found this video informative, insightful, and educational. Would like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.